Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 2nd, 2021. I want to talk about stock and option purchasing ideas for the week of August 2nd, 2021. We'll look at TTM Squeeze indicator from John Carter. This can be used to buy stock, call or call spread. With that, let's jump in and get started. What is TTM Squeeze? TTM Squeeze is a volatility indicator and a momentum indicator introduced by John Carter. It capitalizes on tendency for the price to break out strongly after consolidating in a tight range. The squeeze measures relationship between two studies. One is Bollinger Bands, other one is Keltner channels. When volatility increases, so does the distance between the bands in Bollinger Bands, and when volatility decreases, then distance also decreases. The squeeze takes advantage of quiet periods in the market when the volatility has decreased significantly and the market is building up the energy for its next major move, higher or lower. It's very important to know, the squeeze really tells you whether the stock market is going to go up or down in case of a particular stock. The quiet periods are identified when Bollinger Bands narrow in the width to a point where they're actually inside of the Keltner channel. Very important to know. This marks the period of reduced volatility and signs the market is taking significant breather, building up energy for its next move. Very important. I'm sure many of you have bought call options wondering, hey, stock is going to go up or not. It's in the trading range for a long time. You end up losing money. But with this indicator, it tells you when it's good time to buy stock or call option, because it will tell you it's really building up energy for next major move. So when the trade signal occurs, um, uh, the trade signal occurs when Bollinger Bands move back outside the Keltner channel. Very important to know. This is when the trade signal occurs. The red dot indicates the compression of volatility. This is when you know the Keltner channel, the Bollinger Band is inside Keltner channel. The first green dot after a series of red dot indicate that energy is ready to be released. This is when you know, it's going to happen right now. It's a signal. You know it's going to fire. So if the oscillator, the long-term C wave, if it's above zero, when this happens, then go long. You see a green dot, oscillator is above zero, which is a longer-term C wave, you go long. Buy stock, buy call option, call spread. But if it is below zero, then go short, meaning buy sell, basically buy put options or sell stock short. So with that, let's jump in, look at how indicator works. So as you can see here we got a 1 year, 1 day chart, a 3 day, 2 year chart, and a weekly 5 year chart, and a monthly 10 year chart. The reason we always look at multi-time frame is because you will know where the stock is at. By looking at here cliffs, by looking at a daily chart, you think stock is really around its high. But as you look at 10-year chart, you know it's nowhere near the high. It's really trying to go up as you speak. So with that, looking at this here, we got a chart here, and as you see here, we got a red dot here. We got a couple of green dots here. So right now, when the red dot happened, it indicates the tight compression. The Bollinger Band is inside Keltner channel. Right now, we got a green dot. So when the green dot happens, then you look at the short-term A wave. So short-term A wave is below zero. That tells you, you know what, right now it's bearish. But as you look through here, there are some yellow bars. They are becoming shorter in size or length. So yellow bars are bullish, as you can see here. Even though it's below zero, there is some bullishness to this. But if you look at the longer term C wave is above zero. The light blue is bullish, the dark blue is a little bit bearish. Right now it's above zero, but a little bit bearish. But John Carter says as long as it's above zero, then you can go long. Same story, then you can look at a little bit longer term, 3 day. 3 day we got dot, 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 red dots, tight compression volatility, Bollinger Band is inside current channel. If you look at shorter term A wave below zero, bullish, meaning it's yellow, but longer term C wave is above zero, it's clearly bullish here. And we got a dot here in the weekly chart. Longer term C wave is above zero. Basically, it's a good signal to go long in this scenario. So that's what John Carter is trying to tell us. So with that, let's jump in. Here we got list of stocks starting from Apple. Apple is a $145 stock. It's almost 3% below the 52-week high. As you can see here, we got a signal here, a TTM squeeze indicator forming in a one-day chart. So with that, let's look at Apple here in Thinkorswim platform and see if it's good to buy Apple. So Apple, as I look at the chart here, first let's go into TTM squeeze chart here. So we got a 1 year, 1 day chart, a 3 day, 2 year chart, and a weekly 5 year chart, and a monthly 10-year chart. Clearly, as you scan through this quickly, Apple is at all-time high, even in a 10-year chart. That tells you it's really gaining some traction here. So if you look at 1 day, 1 year chart, we got a dot here, meaning at this time, Bollinger Band is inside Kelton channel, tight compression. And if you look at the shorter term A wave, that's below zero, but the longer term C wave is above zero. Clearly, this is a bullish pattern. Per John Carter, we could buy the stock at this time, or call option, or call spread. So if you go to a different chart here, as you can see, Apple is doing pretty nicely. Nice looking chart here. On the balance volume is positive. That's good. Right now, as you can see here, volatile, the RSI is 58, tells you can cautiously buy. Whenever it's above 70 here, this is overbought. I would not buy at these levels, but right now it's okay to buy. Even though it's a little high, but it's okay. But as you look at the DMI chart here, it's as you see here, the blue line is above red line. It's bullish at this point, but the distance is very narrow. That tells you it's not overly bullish. It's slightly bullish at this time, but the blue line is trending down, so you got to be a little bit cautious. As you look at the historic wall, right now volatility, implied wall is below historic wall, so that's why a little bit lower volatility. If you look at the IV rank here, IV rank is 11.2, very low volatility. This is why volatility is low. Bollinger Band is within Kelton channel at this point. And smart money is actually flowing into the stock. That's why you see here check-in money flow pretty stable here. That's a good sign. So with that, we could go to a option chain here, and we could buy some Apple. So if you see here, Apple 145, you could just buy some Apple right away by clicking ask here, and confirm and send. If you don't want to buy Apple stock itself, you could go 19 November 2021, 109 days out, and you could buy a call option, and you could typically buy a delta 70 call option, which is right here. 74 is good enough. You can pay $15.20 instead of paying $145 for the Apple stock. You can control 100 shares by buying one call option and paying $15.20. You could confirm and send. If the Apple stock goes above $150 by 19th November, you will make money. But if the Apple stock goes below 150, you will lose your money. So you will pay 1520 to buy this call option. Your max profit is infinite. As Apple stock goes up by $1, your call option goes by 74 cents. That's why it's a 74 delta. So this is one way to play, but if you don't want to put too much money to work, you could look at a call spread. So if you want to buy call spread, Apple is on 145, you could go 140, 150 spread. So if I do that, so if you see here, 145, 140, 150. Right here you're paying $5.23. It's a $10 wide spread. The remaining portion of $10, which is around $4.72, is your profit potential. It's almost double your money type play here. If you confirm and send, you're paying 523 to make 477. Your break-even point is just below the current stock price. Little bit conservative strategy. Your max profit is capped at 477 and your max loss is 523. This is a little bit conservative strategy. You could do something like this. It's probably a better risk reward type ratio here. This is one way to play. And then we'll go and look at a couple more stock here. As you scan through here, we got Cisco. Cisco is $55. Right now there is a weekly squeeze here. Stock is just 1% below all-time high. We could look at how is Cisco at this time and go from there. So if I go to Cisco here, CSCO. So let's look at the TTM Squeeze chart here. As you see here, we got a daily chart, a 2-year chart, 3-day, and a weekly chart and a monthly chart. We got nice red dots forming here, showing right now the Bollinger Band is within the curtain channel, very tight compression. And as you scan through here, the shorter term A wave is below zero, but trying to make some progress here, trying to become shorter. This is a little bit bullish sign here, and longer term C wave is clearly above zero. That's a bullish sign. And as you scan through the weekly chart here, we got a red dot, meaning right now it's a tight compression. Bollinger Band is within the curtain channel. And as you scan through here, the A wave, short term A wave is above zero. Longer term C wave is also above zero. Clearly, according to John Carter, this is a bullish sign. And if you look at a different chart here, as you scan through here, clearly people are buying into this. On the balance volume is nicely going up. RSI is 62. That's also good. It's gaining traction here, and it's bullish. The blue line is above red line. It's bullish at this time. Volatility is 29. That's pretty low, and smart money is going into the stock here. That's why check-in money flow is positive. So with that, we could go to option chain here and look at Cisco. Cisco stock price is 55.37, all-time high is 55.65, just below the all-time high. So you could buy Cisco stock by going here, and you could buy at the current price. If you don't want to do that, if you want to play options game, you could go here, you could buy delta 70. Right here, delta 74 is good enough. You could buy this right here and pay $6.85. This will control 100 shares of Cisco, expiring on 21 Jan 22. You could confirm and send here. You pay $6.85. Your profit potential infinite. If Cisco stock goes up by 56.85, you will start making money. That's the break-even point. Otherwise, you will lose the money you paid, which is $6.85. So if you look at this is one way to play, but if you want to do a spread, you could do 50-60 spread here. So with that, we go to 50 here and buy a call spread 50-60. There you go. So you're paying $5.28 and remaining portion of $10 spread is your profit potential. It's again around $4.70, around 73 cents or so. So if you confirm and send here, as you can see here, you're paying 528 to make 472, almost double your money type trade. If the stock price stays above 55.28, you'll break even. So a little bit conservative play. You could do something along these lines, and then we'll look at one or two more and go from there. So as you scan through here, the rows where I have highlighted in gray here, those are the buy signals. Let's look at one more here, CSX. As you see here, CSX has got a 3-day, a 3-day squeeze and a weekly squeeze. Let's see how is CSX. So with that, let's go back to Thinkorswim here, CSX. So let's go to squeeze chart here. If you look at CSX, as you see here, there's a squeeze forming in a 3-day, 2-year chart. And when this happens, the shorter term A wave is below zero, gaining some traction. As you can see here, the lines are becoming shorter and it's a yellow, meaning it's a bullish, but still below zero. But the longer term C wave is above zero, that's bullish. And as you see here, we got a squeeze in the weekly chart, and shorter term A wave is below zero, but the longer term C wave is above zero. That's the bullish. So per John Carter, this is a bullish signal. It's a bullish setup. So if I look at different chart here, so on the balance volume is going up, that's a good sign. RSI is 52, that's also good. Right now looks like we have a probably a bearish crossover in the making, meaning red line is trying to cross above the blue line. That's a little bit bearish at this time. Implied vol is very low and smart money is actually flowing into the stock. That's a good sign. So right now let's look at the option chain here for CSX. CXX, the $32 stock, all-time high was 34, just below all-time high. You could buy stock by clicking here and buy some CSX outright. That's always a good strategy. If you don't want to play stock, you could buy call option. You could buy Delta 70 here. As you scan through here, you got Delta right here, 69 or 70. I think 69 will do. This is expiring in 19 November. You got 109 days. You could confirm and send. You pay $370, and if the stock goes above 33.70, you make money. And every move you'll make, I think it's a 69 delta. You make 69 cents for a dollar move. If you don't want to play, or if you have a little bit smaller account, you could buy a probably a 30-35 spread. So if you want to buy 30-35 spread, you could do something like this, buy vertical 30-35. It's a $5 wide spread. There you go. You pay $275, and remaining portion of $5 is your profit potential. So if I have a confirm and send here, you pay $275 to make $225. A little bit less than doubling your money type trade here. Your break-even point is 32.75, just above the current stock price. This is one way to play. But if you want to be a little bit aggressive, you could go for a little bit wider spread. So you could do probably 25-35 spread. So if you do that, you can go to 25 here and buy a 25-35 spread. There you go. So if it's a $10 wide spread, you're paying $690. Remaining portion of $10 is your profit potential. So as you can see here, you're paying $690 to make $390, $310. This is not a great risk reward. I would go with the previous strategy. So with that, let's go into one more probably. So as you scan through, we got a couple more here. So this is one page. I got one more page here. So as you can see, I got a bunch of stocks here. So as you scan through here, if you look at DHI, Dr. Horton, it's a home builder. Right now we got a squeeze in the 3-day chart and a weekly chart. We could look at this one and see if it's worth investing at this time. Let's go back to Thinkorswim. All right, DHI. So if you look at DHI here, I'll go to squeeze chart here. A squeeze in the 3-day chart. As you can see here, when the squeeze happened, shorter term A wave is below zero. It's making progress. The yellow bars are getting shorter, which is good. Long term C wave is above zero. That's always great. And same story here, we got a squeeze forming in a 5-year weekly chart. When that happened, shorter term A wave is below zero and the longer term C wave is above zero. That's a bullish sign. John Carter says you can go and buy at this time. And if you look at different chart here, on the balance volume is great. RSI is getting traction, that's good. And it's bullish from a DMI perspective. The blue line is above red line, nice distance here. Smart money is flowing into the stock. Implied vol is low. All the coast is clear. You can buy the stock or call option. So with that, you can buy call up stock at ask here, or if you want to play options game, you could buy delta 70 here, right over here. You could buy by paying $12.15, expiration 19 November, and you could confirm and send. If the stock stays above 99.65, you'll make money. Otherwise, by expiration you lose money, but you could always sell before. So if you want to play the options spread, you could do, it's 95 right now, you could buy 90 and 100 spread. So if you do that, if you go here 90, 100, there you go. You pay 520, remaining portion of $10 is your profit potential. That's 480, almost double your money type trade here. And break even is 95.20, just below the stock price. This is one way to play. If your account size is a little bit smaller or you want to be a little conservative. So with that, probably we'll look at one more and go from there. As I scan through here, I see Hartford. It's an insurance company. They're just 9% below 52-week high. We got a squeeze in a 1-day chart and a weekly chart, 3-day chart and a weekly chart. We could look at Hartford and see what's going on here. So HIG. So as you look at Hartford, let's go to squeeze chart here. 3-day chart, there is a dot. As you can see here, shorter term A wave is trending up. Right now it's below zero. Longer term A wave is above zero, and it's light blue indicating bullish. And we got a dot here in the weekly chart. A wave is below zero. It's a yellow meaning bullish, and at the same time longer term C wave is above zero. So with that, coast is clear. You could buy Hartford at this point at HIG, or you could buy call option. So if you look at a different chart here, clearly on the balance volume is on the way up, which is good sign. RSI is gaining momentum here, that's good. There is a bullish crossover in the DMI chart in the progress, which is always great. And as you look at on check-in money flow, smart money is flowing into the stock. At this time, IV is very low. Coast is all clear for Hartford to go up. So with that, you could look at the option chain here. You could buy Hartford by paying 64.70, or if you want to play call options, you could buy delta 70. I would go with the 137 days out. Delta 70 is right. Probably you could go with delta 80 here. You pay $10.80, buy this call option here. As you confirm and send, if the stock stays above 65.80, by the expiration you'll make money. That's your break-even point. Otherwise you'll lose money. So you have to pay 1080 for this, but if you want to play spread game, you could do that too. Right now stock is at 63.82. You could probably go 60-70 spread here. If you do that, you could go here 60-70 right there. So you're paying 418. The remaining portion of $10 is your profit potential. You'll make more than your money here, more than double your money. You pay 418 to make 582. Your break-even point is 64.18, just above the current stock price. This is a different way to play. A little more conservative. You don't pay too much money in the beginning, and your profit is also capped. So with that, thank you very much. So this is a second page here. And thank you very much. Happy investing and trading. Please subscribe.